Ray Wright, and I am here with yet another part of my series on the real estate process. And today we're talking about lending, the loan process. And I'm here with my partners, Tom Tinker and Ryan Bonds from CherryCreek Mortgage. Thanks for coming in and talking to us about loans.
Hey, well, thanks for having us.
No problem. So I have a question. First of all, kind of tell a little bit about yourselves and how long you've been in the business.
So, together, combined, we're about 30 years about. I'm 27 years. He's been in the business for about 3 or 4 years now.
Mm-hmm. Wow.
And we've worked together for about that time.
So. Wow. So basically before I was even born. That's pretty cool.
Yes. What's crazy is I'm 31, so I've only been doing it since I'm 2.
That's really, and you should be good at it by now.
Yeah.
So
very impressive.
Yeah, I'm impressed. So it doesn't take much, though, to impress me. When it comes to buying a home, obviously the first step is to contact me, and then I will get you with my partners in order to be prepared for that loan. What are the steps for getting pre-qualified for that home loan?
Well, what we typically do is once they do call you, then you send them to us. We get some general information from them, and we basically look at a couple things. We look at their credit, we'll look at their income, and we'll look at their down payment. And so typically we'll go over the phone. I'll get some information from over the phone to be able to pick up that information. And then once we have that information, we'll look at income documentation. So if somebody is, for instance, salaried or works hourly, we'll look at usually a month's worth of pay stubs, and we'll look at last year's or last 2 years W-2s, depending on what our automated system will tell us we need. And so sometimes if we get an automated approval, which is we run everything through the Fannie Mae and Freddie Mac DULP system, they'll tell us exactly what we need. But typically it's about a month's worth of pay stubs and a year's worth of documentation like W-2s or even tax returns. Now, if they're self-employed, typically we're going to look at a 2-year history for being self-employed. So if you do own a business, not likely it's under a year. There are some investors that will maybe see that depending on what DU and LP says, but for the most part we will need 2 years of tax returns, and we'll take the average of the 2 years.
Okay, so what if somebody's coming in, maybe something with a specialized loan, like a VA loan, anything specific to a VA or an FHA or a conventional loan that they would need that they wouldn't normally need?
Yes, well, obviously for a VA, you got to be a veteran and you got to be able to qualify. So we'll typically look at their LE, their service pay stub if they're currently with the military, or we'll look at their DD-214 and they'll tell us if they are qualified to use the VA loan. And so that will give us there, and what I love about that program is it's zero down, so you don't have to have any money.
Gotcha.
And if we get the seller, and sometimes we do get the seller to pay some of the closing costs, a VA or a veteran can get in on a house without any money out of their pocket.
Awesome. So that would be something like a DD-214 they should be preparing in advance before they even maybe can talk to you.
Absolutely, and if they don't have it, we have ways of getting it as well.
How long does it take to usually get a DD-214?
Well, in the olden days it was 30 days, but now we can get it within a day or two because everything's automated. So the government's come aboard on that area.
Awesome. So I know there's a big trend right now. Actually, it's been happening for several years where buyers are coming in and purchasing homes with a lower down payment. Used to be, you need to have 20% down to get into that house, but now we've seen a trend of more and more buyers using financing with much less than 20%.
Yes, I would say even, probably 20% of the people that we do with, especially the people that maybe have sell their home and they buy a new home, they have that 20 or plus percent to put down. But those folks that are maybe buying their first home, the myth of I got to save 20% is not the case. We can do as little as 3% down. If you're a veteran, 0 down, but if you're not, you can do a 3% down conventional. There's even some down payment assistance programs that will help that can do that. But for the most part, with PMI and those, if you're putting less than 20% down, you can even buy out the PMI. Yeah. So you can have the same payment as somebody with putting 20% down. So.
Yeah. So I mean, if as long as we see the trend of our house prices going up year-over-year increases, then there comes a time when you can actually have that PMI or that mortgage insurance premium MIP removed from the loan.
Exactly. We've had even people that have done conventional loans, 3 or 4 years ago. Values have really appreciated. So we help them, get their appraisal, connect with their current lender, and actually had their PMI dropped. And so in FHA, we had a lot of people that did FHAs 3 or 4 years ago, and we were able to refinance them because they had enough equity to a conventional loan.
Gotcha.
Same interest rate, but take off $200 or $300 a month for their PMI.
Now, you mentioned down payment assistance. I don't know if anyone wants to jump on there, but down payment assistance for somebody that maybe doesn't have any money in their bank and they want to buy a house. Can you say something about that?
Yeah, most definitely.
Might be able to.
Yeah, so for down payment assistance, they have conventional and they have FHA loan programs on both of them. The way that they work is they have a few qualifications to get into them. You need at least a 660 FICO, and you need to make under, I think it was 140 144,000.
Yeah.
I think somewhere in that range, but it depends on what county you're in. But locally, it's around that. And the way that it works is you will get a down payment assistance loan, which will have a 3.5% down on FHA that'll be covered in a second lien, or a 3% down conventional, and you'll have a second lien for that as well. They're silent seconds, so they don't have a payment associated with them, but you can make payments on them. And then also, if you needed help with closing costs after that, you can get a third loan as well that will cover either 2 or 3%, and the more money you borrow, the higher the interest rate is. So,
I know we kind of covered some of this, but when a buyer is in escrow right now, what are some of the things that definitely do not do when you're pre-qualified for the loan and you're looking for a house? Don't do this. What would some of those things be?
Buy a car. Terrible idea.
True story. I'm sitting in my office, I get a call from another agent, says, hey, my buyer just showed up to final walkthrough. And I'm saying, yeah, what's wrong? He just showed up with his brand new truck. The buyer got excited. He was moving in that weekend. He goes to the final walkthrough, and on his way, he stops at the dealer, buys a truck so he could shove stuff in there when he's moving. They did a backup credit report at the very last minute before the loan funded, and it threw him out. Yeah. Could not qualify for the house anymore. He lost the house. He lost his down payment. Yeah. His deposit.
Yep.
And the seller had to sell it to somebody else.
Well,
so not do
the good news with not the good news, but the because of technology making our lives much easier, it does make that known easier. So that we get an alert when that happens. So when somebody runs their credit somewhere else, we actually get an alert, and we have to check and see if they're new financing.
Yeah, I see. This was about 10 years ago, so that was before all that new technology, which makes it even worse today for you buyers. So don't mess up and go out and buy things. Don't buy things on credit. Okay, so lastly, before you go, I know you guys have got tons and tons of work to do, and I have nothing else to do but sit here and just edit this video after we're done. If somebody is thinking of buying a house, and maybe they're not sure, what should they do? What should they be doing? Maybe come to you, and if they're not ready, you can tell them what they can. But what are some of the steps they should be doing to ensure that when they are looking for that house, that they're ready?
Well, we tell people to, even if you're going to be a year out, even 2 years out, is game plan for the home purchase.
Right.
And so what I mean by that is, if you wait, say you want to buy a year from now, and you come back a year from now, and all of a sudden you're at a 640 FICO score. Well, guess what? You cannot do the down payment assistance program because it's a 660 FICO score.
Okay.
And so what we like to do is, when people do come in, and it's more of a consultation on figuring out what it's going to look like for them to purchase. It could mean, hey, you can buy next week, or you can buy a year from now. And we'll give them a game plan of what they need to do. And so I would have them call you. You could then direct them to us, and we would then meet with them. It doesn't cost anything to do that. We would then take a look at their credit. We would take a look at their income. Maybe they're going to get a new job promotion in 6 months or a year, and they know what that number is going to be like. Well, we can tell them based on what they can qualify based on that number. So we have people we call in our drawer that are people that are 2 months, 6 months, a year out from purchasing. And if they had credit issues too, some things that we need to get taken care of, we can kind of give them a game plan to get them credit ready. We've taken people that in the low 500s and now are peaking at the 660s or ideally in the 700s,
wow.
a year and a half from now. And so those are people that are grateful that they did meet with us to be able to do that. So.
Gotcha. Well, I appreciate you guys taking time to talk about lending with whoever is watching this, all three viewers. And you might... Yeah. Hi, Tom's mom. And you might see one of you guys with me at one of our open houses because we like to send them together. That way when buyers come, you get them pre-qualified, or you at least have their answers for them right then and there. So thanks to Tom Tinker and Ryan Bonds, my partners in lending from CherryCreek Mortgage. I'm Ray Wright, and I'm looking out for you.